For most of us, 2020 was a nightmare, being locked inside, barely seeing anyone. However, for the banking industry, it was a godsend, a year for monumental change as pretty much everything went digital. People continued spending money through apps, phones, and over the internet as bricks and mortar stores truly struggled. One such app that saw improved growth and revenues was Chime, a US-based banking startup that calls itself a fintech company, not a bank. You might have heard of Chime through their massive valuation, their cheap accounts, or maybe from their Dallas Mavericks shirt sponsor. But what is Chime, and how was Chime started? Here's how it happened. Firstly, what is Chime? Well, Chime is a fintech that provides banking services through mobile phones and believes banking services should be helpful, easy, and free. Chime doesn't rely on overdraft fees, service fees, or minimum balance requirements. Instead, Chime gives customers no-fee mobile bank accounts and debit cards, focusing on American consumers who earn between $30,000 and $75,000 a year. Chime partners with regional banks to design member-focused financial products, providing lower-cost options for Americans. Chime offers services like Spot Me, an overdraft with a free $200 limit, an early payment system where customers are paid 2 days before payday, a charge-free credit card designed to improve credit, and the ability to pay anyone instantly for free. Chime then makes its money on transactions when its customers actually pay for something. Chime was founded by Chris Britt and Ryan King in 2013, but its official launch was in 2014 on the Dr. Phil show. The founders don't believe that pushing credit onto clients is good for regular people. Since Chime isn't technically a bank, they work closely with Stride Bank and Bancor, who oversee all the accounts on Chime. Bancor and Stride then treat Chime accounts like any other bank account. This low-cost setup has led to increased popularity, which saw Chime hit a $1.5 billion valuation in March 2019. But by the end of that year, the valuation had quadrupled. That's all for a banking service that doesn't have any physical branches, using Visa debit cards to log in to chime.com or the app. Chime makes its money by charging its clients interchange fees on transactions. That means the more a customer swipes their card, the more money trickles into the Chime coffers. So by offering a cheap service with no monthly fees, people have more disposable income and are more likely to buy more things, which means more transactions and more money. Being a challenger bank in these frothy markets, you won't be surprised to learn that Chime is now valued at $25 billion, making them the most highly valued US digital banking startup now preparing for IPO. Britt suggested that he would get calls from 2 SPACs a week to see if they were interested in a quick listing, but rewind the clock to 2013 and Britt and King pitched their idea to more than 200 investors in the first 3 years, with little success. Early skepticism on its credibility meant that the likes of Sequoia Capital and Andreessen Horowitz didn't invest, meaning smaller firms like Forerunner Ventures were able to invest early and will likely reap the rewards of an impending IPO where they hope to achieve a $40 billion valuation. Chime is now sat in the awkward position of offering banking services but not being an official bank. As of May 2021, after being sued years earlier, it agreed with a Californian regulator that it would stop calling itself a bank, having to remove the words bank and banking from all of its marketing material, including the website URL. Today, it is a fintech firm with banking services provided by partner banks. To acquire a banking license is a tricky process, sometimes taking years. Therefore, the decision to partner with FDIC-insured banks, who have centuries of experience, adds a layer of protection for customers, and for Chime, it's easier and quicker. Chime seems to be so easy to use, but this also causes some problems for the business. Because it's so easy to set up an account with no credit checks, account shutdowns happen just as quickly, with little to no explanation why, and some users have complained that their money gets trapped. Chime is happy to suspend, freeze, or close any account without notice if it so wishes, which has led to a high number of consumer protection cases to the Consumer Financial Protection Bureau. At the end of the day, Chime was created because they believe everyone deserves financial peace of mind. Chime found itself in the sweet spot of the pandemic, with online transactions rising through the roof, dragging Chime's revenues up with it, reaching almost $1 billion a year, with over 13 million customers. With nobody wanting to go into a bank branch or touch cash, people became so comfortable dealing with banking services through an app on their phone. We now await the fate of Chime in the public markets, and as far as making pennies off each transaction is concerned, that was our 2 cents. And that's how it happened.